Welcome back to Portfolio, everyone. And today we're going over the top 7 dividend growth stocks you can buy right now. So these top 7 stocks all have low starting yields, but have insane 5-year dividend growth rates. Each of these 7 stocks have been growing their dividend on average of over 20% per year over the past 5 years. They all pay safe, consistent dividends that are growing each and every year at an insane rate. So we're going to break down the top 7 stocks with these massive dividend growth rates. We're going to go over each individual company, talk about their payout ratio, how fast they've been growing that dividend, and we're also going to take a look at how safe that dividend is and determine if it's a buy for our portfolio right now. So everyone, as you know, I'm the Gen Z investor, and every single day on this channel, I post videos about different stocks you can buy, overall stock market performance, or any other big stock market news and headlines. So we're going to jump right into it. My current financial freedom portfolio sits at a value at $48,873. We saw a nice day up close to 1%, or up $446 on the one day. Overall portfolio still down around 7.5% in the red. We're going to jump right into the first stock, so I'm going to ask you to please like and subscribe. The first stock on our list today with a huge dividend growth rate is Visa, ticker symbol V. Currently trading just under $200 a share. 1 year chart, they're up 7%. And if we take a look at that dividend scorecard, you can see here that they have a very low 0.61% starting yield. So their starting yield is very minimal, but of course with Visa, you're getting some nice capital appreciation, so your share price is growing at an insane rate each and every year. And along with that very low starting yield, you're having a massive 5-year dividend growth rate at 20.11%. So your dividend is growing on average around 20% per year, and they've been growing that dividend for 11 years. So although you're getting a low starting yield, your dividend that you are collecting is growing at an insane rate each and every year, and that's compounding and growing massively year over year. And if we take a look at Visa's dividend safety score, they are actually ranked at the highest rating of 99, so that dividend is extremely safe, not going anywhere, and of course with a sustainable payout ratio at only 23%, they'll be able to grow that dividend at an insane rate long into the future. So that's what all the stocks on this list are going to look like. You're going to see a lower starting yield, somewhat sustainable payout ratio with an insane 5-year dividend growth rate. So moving on to stock number 2 on our list is Home Depot. One thing I'm going to mention before we move on is that these stocks operate within different sectors of the market. They're not all financial companies, or they're not all retail companies like Home Depot, so you are going to get a little bit of variety on this list. So ticker symbol HD, Home Depot, currently trading at $264 a share. On the 1 year chart, you can see they're up 22%, so nice share price appreciation. 5-year chart, they are up 131%. So like I said, when you're getting into these lower yield companies, usually there's a lot of price appreciation that comes along with the shares. Taking a look at that dividend, they have a 2.26 dividend yield, so nothing too low. Like nice dividend yields are range between 2 and 4%, so still on the low side, but not as low as Visa's. Payout ratio at under 60%, so very sustainable, with an insane 5-year dividend growth rate of 23.68%. So on average, they're growing that dividend at an insane amount each and every year. And like the remaining stocks on this list, all their 5-year dividend growth rates are above 20%. And they have an 11-year dividend growth history, so very close, working towards becoming a dividend aristocrat at that 25-year mark, and they are doing a good job of growing that dividend each and every year. With regard to dividend safety, again, they have a very safe dividend with a score of 87, so very unlikely that the dividend gets cut anytime soon. Stock number 3 on this list is Syntas, ticker symbol CTAS, currently at $305 a share. 1 year chart, you can see they're up 12%. Jump over the 5-year chart, they're up close to 250%. So beautiful share price appreciation over the past 5 years. And along with that share price, you can get a nice 0.87% dividend. So very low starting yield, very low 31% payout ratio, so extremely sustainable. A lot of room for the company to retain earnings back into the business and grow operations, as well as a lot of room left over to grow that dividend each and every year. And they've done that at an insane rate at 24.57% average over the past 5 years. So of course, you're getting an insane share price appreciation with Syntas. You're getting a lower starting yield, but that dividend is growing at a massive rate. And this is actually a dividend aristocrat, and they've been growing that dividend for over 28 consecutive years. So they've showed that they can grow a dividend not only through an economic boom, but also through a recession and a depression. Syntas's dividend safety score is once again extremely high at 97. Very safe, very unlikely that that dividend gets cut anytime soon. This company will probably continue to grow that dividend at an insane rate moving long into the future. Number 4 on our list is Texas Instruments, ticker symbol TXN, at $131 a share. 1 year chart, they are somewhat flat around up 1.54%. Move over to the 5-year chart, you can see once again similar trend with these first couple stocks. Nice, beautiful long-term share price appreciation, up close to 160% on the 5-year chart. Taking a look at that dividend, nice starting yield at 2.77%. So that starting yield is actually not too low on this company. They do have a higher payout ratio around 70%. But once again, I like to make sure with my dividend companies, the payout ratio remains under 75%. So they're still meeting that criteria. And they have that 5-year dividend growth rate of close to 21% average over the past 5 years. And they've been growing that dividend for 14 consecutive years. Once again, that shows they have a good history of continuing to raise that dividend year in and year out. Moving on to dividend safety, still a very safe dividend with a ranking of 90. All these companies so far have ranked been very safe, and there's very unlikely that any of these companies will get their dividend cut anytime soon. Stock number 5 is Mastercard. So of course we took a look at Visa. Their counterpart, their main competitor, Mastercard, is another company that qualifies for this list. Ticker symbol MA. Current share price at around $309 a share. 1-year chart up only around 8.6%, but if we take a look at a longer term perspective, up over 220% over the past 5 years. 5 years ago, shares were trading below $100 a share, now up to $309 a share. So beautiful share price appreciation, along with a very low starting yield at only 0.52%. Very sustainable, almost minimal payout ratio at around 24% of earnings, with an insane 5-year dividend growth rate at 24.57%. So once again, these companies just show that they have a beautiful job of growing that dividend at insane rates year in and year out, and they have a 9-year dividend growth streak. And their dividend safety score is at the highest possible at 99. This is the highest thing you can get from Simply Safe Dividends, and it just shows that it is almost impossible for this company to cut the dividend. Of course, any company can cut the dividend at any time with regard to their board of directors making that decision, but with regard to financials and analytical data, very unlikely and almost impossible that Mastercard cuts the dividend anytime soon. With all these companies who have nice, beautiful dividend growth streaks, and they have a practice and a company policy of growing their dividend at an insane rate, very unlikely that any of these companies cut their dividend anytime soon. Moving on, we saw Visa and Mastercard, and actually Home Depot's counterpart and main competitor. Lowe's is actually on this list as well, currently trading at $148 a share. 1-year chart, they've seen an insane 42% growth. 5-year chart, they're up around 117%. Beautiful long-term share price appreciation. With Lowe's, you're getting a nice 1.5% starting yield, with a sustainable 32% payout ratio. So a sustainable payout ratio below 35% just means that there's a lot of money left within the company to continue to grow operations, grow revenue, and grow income, with paying out enough money that there's actually enough room to continue to grow that dividend at this beautiful 5-year dividend growth rate of 20% for the next 5-10 years into the future. And of course, Lowe's has the longest dividend growth streak on this list at 56 consecutive years of growing the dividend. They are a dividend king. There's only a handful of dividend kings on the market, and the fact that Lowe's can continue to grow that dividend for over 56 straight years, and they have such a low sustainable payout ratio and can grow the dividend at such a high amount, just shows how well managed this company is, how good they are of generating more net income each and every year, and just shows how strong this company can be. It also shows extreme things that Lowe's has a dividend safety score of 93, very safe dividend. So once again, they've been growing that dividend for 56 years. They have a 33% payout ratio. Very, very unlikely that dividend gets cut anytime soon. This company has done a great job of managing their financials, growing that dividend for over 56 years, and it's very unlikely that this company shows any hardship and any dividend cuts anytime into the future. The last and final stock on our list is Broadcom, ticker symbol AVGO, at around $308 a share right now. 1-year price appreciation of only 2% over the 1 year, but once again, beautiful long-term price appreciation at 139%. This company actually has a very high starting yield along with beautiful dividend growth. So a nice high dividend yield of 4.23%. Payout ratio around 60%, so a little bit on the high side, but very sustainable over the next couple of years, and a beautiful 5-year dividend growth rate around 55%. So their dividend growth history has been insane over the past couple of years. I do not believe this dividend growth rate is sustainable, but it is very nice, and I do believe this company will continue to grow the dividend at a fast rate, but I do not believe they'll continue at this insane 55%. And they have been growing that dividend for around 9 years. And if we take a look at their dividend safety score, this has the lowest dividend safety score of all the companies we talked about today, only at a 67, still considered safe, so unlikely that it gets cut over the next 12 months, but still the fact that this company has been growing at such an insane rate They should do what they can to bump up their financials to kind of get up that dividend safety rating, but overall, not likely that this dividend gets cut anytime soon. Last year alone, they raised their dividend 42% in a single year. So if the company felt comfortable doing that dividend raise in the past year, that means that they do feel comfortable continuing to pay out at that amount and continue to grow that dividend for the next couple years into the future. So overall, that was a breakdown of some low yield, high growth, insane dividend growth companies. These companies are growing their dividend at massive rates year in and year out. And that's how this list was talked about. We went through the top 7 stocks on this list. If you enjoyed this, please like and subscribe. Like I said, I'm the Gen Z investor, and every single day I post videos on this channel about the stock market. So I'll see you in tomorrow's video.